China is near collapse. The Chinese economy is on the verge of financial failure. This news comes as a surprise to many, as China has been seen as one of the most successful economies in the world. China's exponential growth from an underdeveloped country to cementing its place among the major powers in the world is still a miracle for many, thanks to the impactful economic policies in 1970 that completely changed the fate of this struggling nation. Since the end of the 20th century, no other country is contributing more than China towards the globalization of the world. But now, China is facing an economic meltdown that is halting its ambition of becoming the biggest economy in the world. So the question remains, how did the once economic miracle end up inching an economic turmoil? In this video, we'll uncover all the reasons behind the collapsing economy of China and the consequences the world could face in the aftermath of the Chinese economic collapse. So get yourself comfortable and stay tuned to understand the full picture. Let's start off with crashing property market. In recent years, the Chinese property market has boomed, with prices reaching record highs in major cities like Beijing and Shanghai. However, there are now signs that the market is cooling off as sales volumes and prices have begun to fall in many parts of the country. For instance, the sales of the top 100 real estate companies in China are facing a downfall for a consisting 16 months now. This is bad news for developers, who are facing mounting debts and a slowdown in construction activity. It is also bad news for buyers who are seeing their investment portfolios shrink in value. It is worth considering that the property market accounts for almost 25% of the Chinese GDP, and 70% of the general population's wealth is contained in real estate. Over the last decade, the dip in the Chinese property sector is affecting its economy. Financial gurus see these proceedings as indications of a slow-motion financial crisis. What started just as a decrease in property sales is now seen as a precedent of the economic crisis in one of the biggest economies of the world. Though the Chinese government has taken steps to try to give some boost to the market, it remains to be seen whether these measures will be successful in the long term. For now, it seems that the Chinese property market is heading for a crash. Similar to the property crash, there is another factor that is pushing the Chinese economy into havoc, i.e., the pandemic effect. Since the 2020 pandemic, the Chinese economy has been hit hard. The virus has caused widespread panic and disrupted supply chains, leading to a sharp drop in demand for goods and services. This has resulted in layoffs and factory closures, as well as a decrease in tourism. The economic slowdown has also had a knock-on effect for other industries, such as construction and retail. As the world's second largest economy, China's slowdown is having a ripple effect across the globe. The government and central banks are working hard to mitigate the impact of the pandemic, but it is clear that the global economy, and especially the Chinese economy, will be feeling the effects of the pandemic for some time to come. There is another big issue that has become a headache for Xi Jinping and caused uncertainty in the Chinese economy: high internal debts. There are signs that China's economic expansion is starting to slow down. One of the biggest challenges facing China is its high level of internal debt. According to some estimates, Chinese companies now owe more than $18 trillion. This debt is increasingly becoming a drag on growth as companies have to divert profits to servicing their loans. In addition, the high level of debt makes the Chinese economy more vulnerable to shocks. If the interest rates rise or economic conditions deteriorate, a large number of companies could default on their loans, triggering a financial crisis. As a result, reducing internal debt is one of the key challenges facing China's economy in the years ahead. It's not only the external factors that contribute to the Chinese economic crisis, but also internal ones too, like China's inefficiency. Over the past few years, China's economy has been slowing down. This has led to concerns that the country may be headed for an economic collapse. While the Chinese government has taken some steps to try to avoid this, many experts believe that more needs to be done. One of the biggest problems is that debt levels are still rising, and there are few signs that this is going to change. Another issue is that the manufacturing sector is struggling and exports are declining. These problems need to be addressed urgently, or else China could be heading for a major economic crisis. If it had not been for the trade war with the US, the Chinese economic crisis would not have been so likely. Trade dispute with the US. In July 2018, the United States and China imposed tariffs on $34 billion of each other's goods in what was seen as the start of a trade conflict. The two countries have since placed tariffs on hundreds of billions of dollars of goods, leading to concerns about how the trade conflict is affecting the global economy. In China, the tariff conflict has led to slower economic growth and rising inflation. Chinese exports have declined, and domestic companies have been hit hard by the higher cost of imports. As a result, the Chinese government has been forced to inject billions of dollars into the economy in an effort to maintain growth. The trade conflict has also led to job losses in China, particularly in the manufacturing sector. In addition, it has caused tensions between China and its trading partners, who are also being affected by the tariffs. Overall, the trade dispute is having a negative impact on the Chinese economy, and it is uncertain how long it will continue. Conclusion. It is clear that the Chinese economy is facing a number of challenges. The 2020 pandemic has had a severe impact on the country, and the trade conflict with the United States has also hit growth. In addition, China's high level of internal debt is becoming a drag on the economy. If these issues are not addressed urgently, China could be heading for an economic collapse. Thanks for watching. Do consider to like, share, and subscribe to the channel if you find some value in these videos. This will give us a big boost.